What's up, everybody? This is Jimmy with Trading Decoded. It is 4:06 in the afternoon. It's July 15th, 2024. I know. I took a couple of weeks off. Week one was the 4th of July week, and the markets were a little weird. It was a short week for trading. I was off on that Friday. I was also off the following week because I was on vacation with my family, and now I'm back. And I missed the charts and I missed my community immensely. It was very nice to be back. It was very nice to get a nice chart today as well. We did very, very well as a community. Right now, the win-loss ratio is 5-1. So for every 5 wins, we had 1 loss as far as the community goes. Beautiful day. It was an awesome day to come back. We made good money today for the most part, and found some great opportunities to take some great trades. And we're going to talk about those here in just a second. So, first of all, thank you for those of you who reached out via email, Discord, DMs, and all that stuff, asking if I was okay. Yes, it's just YouTube has disincentivized any reasoning for me to make a video consistently. And not only that, as I said before, I was off for a week because I was on a cruise ship out of the country. And then the week before that was a short week, winning week, but just didn't feel like making any videos. So again, thank you for those of you who reached out. I appreciate you. With that said, let's go ahead and launch the charts. Take a look at what was going on. Pre-market was lackluster. I was not excited about pre-market this morning. We had a pretty tight range on SPY, all things considered, as you guys know, because you watch my videos. These 3 dark blue pre-market lines are the lines that I draw from pre-market levels. Now, you may or may not know, I don't take into account these candles that print at 8 o'clock because, well, they're just algorithmic, useless information. Okay, they typically don't work well as support or resistance. I kind of just ignore them. With that said, I do all my charting at 8:30 in the morning, so there wasn't much to go by at that time. We were in a choppy range here, a tight range, very gappy, meaning typically low volume, just not a great pre-market chart. It was difficult to chart these lines. Shortly after I was done, we did break down and make a new support level down here. So going into the open at 9:25, as I always do, we come up with a call and put scenario. What that means is when I'm looking what level I want to get above if I want to be taking calls, and where I expect it to go if I do, and what level I want to get below if I'm interested in taking puts. Okay, these lines will always be based on support and resistance in pre-market leading up to that time. Okay, there's nothing magical about these lines. It's no different. If we are trending up like we were here, I was prepared to play calls because we were trending up. The entire market was very excited this morning, very happy, and so calls were the play. Now, what we are looking for if we breach 562.09, breach, not a candle close. Why a breach? Because we had price action accepted above that line earlier in pre-market, which means that I'm more inclined to be aggressive on that entry if I'm taking that trade. Now, I did not take this trade. I made that abundantly clear. When we opened, we crossed that line. I did not get into calls. I did not feel comfortable getting into calls because Qs were not far away from their pre-market midline here. It's not that the calls weren't the right thing. I just didn't like what I saw at the time, so I didn't take them. I got no qualms with telling people when I'm getting into and out of my trades. I told them if I was going to play calls, that's the line I'd want to cross. As long as we cross that line and stay above this blue one here, this pre-market midline, I'm expecting this thing to run up to the teal line or close to it. And that came from resistance over here. Okay. Well, not only it took its sweet time to do it, but ultimately we broke through because Qs started to break through resistance. Qs were holding a very strong support here. If we were looking at the Qs, we were making sure that we were okay in our calls as long as the Qs keep closing above this pre-market low line right here. That's what kept us in the trade. ADD at the time was dropping like a rock to the downside. Okay, that was also playing a toll on why I personally didn't want to jump into calls, even though we had crossed my call line. Did I wish I would have? Yes, I wish I would have, because exactly how I thought it would go, it went. Okay, and I missed it. And I missed it because I was analysis paralysis. I was taking in more information, being overly cautious, having not traded for the past week. I just wanted to come back and do good. So that played a role in my missing this trade. However, we had plenty of people play this trade and plenty of people got paid. Now, what we were aiming for was at least this resistance here. That was the original play that we talked about at 9:25 in the morning. If we get above this dash line here at 562.09, we're looking for 562.51. Okay, hoping for at least the teal line was exactly what was said. We get to the teal line. We look at 9:39 on the Qs. Qs had just broken out of their high of day resistance. So we're expecting the Qs to run up to their next resistance, which is at 497.62. Well, 497.62 happens to happen at 9:40 in the morning. So what is happening on SPY at 9:40? We're running into a resistance there as well. So naturally, we take a circle because we were considering taking profits at the teal line. That's exit number one. We closed above the teal line during an uptrend. Normally, we'd like to say, okay, we want to hold that resistance now as support, and we'd be looking for the next profit target up, which is the yellow line. Guys, not to split hairs here, but I have to say that we were exactly at 562.83. Okay, support and resistance works. You just have to trust it. Okay, what we don't know is whether it's going to stop the move from continuing or whether it's not. Okay, and that's why we have to look at other things to justify whether we should consider trying to hold on to these trades as we get to resistances. What are the Qs doing? Well, the Qs are breaking higher. Okay, great. Let's see if we can hang on to it. Well, when the Qs fell short of making it to their next target at 498.12 by putting in this red candle here at 942, that is a good reason to get out of the trade. So if you held because we got above the teal line, when the Qs failed to make it to their next target, you could stop yourself out of the SPY trade. Now, it's at this time where I tell everybody, hey, everything we like to see that would tell us to get into a trade to the downside is currently happening. That's what this red arrow here is. That's telling me that Qs, SPY, ADD, and I think I changed it to NVIDIA. Let's see here. And NVIDIA at the same time, all of them were moving or at least red at the moment. And because it's red and stayed on the chart, that means they all closed red at that moment. That means two things. Number one, it means the strength of the move to the upside, even if it's temporary, is diminishing. Why should we consider that being important? Well, because if the market in its entirety is moving up, there's reason to stay in your calls. But when you start to see this is symbolizing weakness in the market. Not that you should jump into puts during an uptrend, but that maybe you should consider putting a stop loss in place tighter than where you may have had it, or in profit, or just take yourself out of the trade because weakness is starting to show up. Don't hold through it because unfortunately, a lot of times we hold through it, ignoring the weakness. It turns into a candle like this. And then guess what happens? You're going to hold on to those calls that were once nice and juicy green. You like the taste of that juiciness. Well, now it's not there anymore and you want it back. So you turn this trade into a hold and hope. And unfortunately, that would have just crushed you. Okay. You would have taken a very long time to get back to profit on that trade, probably somewhere around here, or even the pink line was what it would have taken to get back into profit at that point. But you do you, it's your money. This is what I tell my people in our community in real time. Guys, The red Jim indicator is popping off. If you're still in your calls, you may want to consider tightening up those stops or taking profits. I would not buy puts, my exact words. I would not touch puts at least until we breach this green trend line, was my exact words. You guys who were there, you heard it, you know. That is when I entered my first trade of the day. During this candle, not just because of SPY though, we rejected resistance here. We waited for Qs to break, which happened to time up perfectly with that trend line, through this pre-market midline resistance. Okay. And ADD at the time was already printing red. Okay. So we had momentum on our side. This is important. So we get in here. You either get out here because at 944, Qs was running into their pre-market support, stopped on a dime right there, but ADD was still printing red. We had momentum on our side. We decided, hey, we close below that line. As long as we stay below the pre-market low, let's see if the Qs could continue to push down. Now, we didn't have any other targets low until 494.87 on the Qs, which is way down there. Of course, we're hoping for that. But before that happens, we have our put line on SPY. Now, in this particular case, the put line wasn't a trade worth taking unless we can close below it. Why a close on the put line? Because we have no pre-market sales or action below that line on the day. As I told you guys at the beginning of this video, I do not take these candles at 8 o'clock with a grain of salt. They mean nothing to me. So that doesn't count as price action below that line. We never close below our put line. But the reason the put line is because it is a line of support. So we decided, let's get into this trade. We hope that the support fails. If not, or we struggle to get below it, stop yourself out with a nice, decent win. I happened to get out while this candle was struggling to move a little lower. ADD at the time started to struggle to move lower as well. And if you go back and look at ADD, it had already started to make its move back to the upside. Took SPY 2 minutes to catch up with ADD. So as you can see here, ADD at 944 printed a big green candle. It also put in a higher low shortly thereafter, indicating that the move to the downside, or at least the trend of ADD at that time, was officially over. Okay. Now ADD is a gauge of the overall market, is what we like to see for letting us know what's happening in the small caps and things of that nature. Okay. Now, I'm sorry if you can hear my kid playing VR in the background. It's annoying as fuck, and I want to yell at him, but I'm not going to do that. So this trade here ended up being 34% from when I got in. Now, we had people get in all the way up here, which obviously would have doubled the return on that trade. I'm okay with a 34% win. I mean, that's good money, especially when you're playing a fair, decent position size. But 34% is 34%. And that happened in a 3-minute trade, 2.5 minutes. I'm not going to complain about that. But at that time, we were moving down. We bounced off support. We pulled back to resistance. And now here's the key. Not just resistance on SPY, but also resistance on Qs. Okay. We were talking about how much Qs were struggling earlier in the day at that pre-market mid area. We rejected it right here. We rejected it again. And I told everybody at this point, guys, this is a pullback to resistance, both on Qs, both on SPY. If you're interested, this is another good put opportunity. What we're hoping for is either SPY or Qs to make it back down to their support levels to scalp that trade. Now, Qs didn't quite make it back down to their low. They put in a higher low. For those of you guys who are in my community, you know higher lows are bad for what? Puts. Why are they bad for puts? Because it's telling you that either the sellers are not strong enough to bring us back down to the level they just made it down to, or the buyers are getting stronger because they didn't allow this low to come down to the one to its left. Okay, either way, however you cut it, remember that statement. higher lows are bad for puts. Does it mean buy calls here? No, it doesn't. But it does mean if you're in puts and you see this, you should consider taking yourself out of those puts instead of finding out the hard way that the buyers are getting stronger, not weaker. Okay, so we hit this level down here. Again, whether it's you recognizing higher lows on the Qs or because we hit that support level on SPY, that one there was a 30% winner. Again, nice clean trade, in and out, 2.5 to 3 minutes. That was done for the day for me. Now, this is before we caught great moves to the upside. Okay, so even though I'm personally done trading at this point, doesn't mean the chart's over. Certainly doesn't mean that the day is over. Look at this move to the upside. We were talking about how strong the market was even leading into the open. We recognized that these were counter trend trades. We got into them for the right reasons. Nothing super aggressive here. Pullbacks to resistance on both SPYs and Qs, looking for the move down to the same support that held before. Here, we at least waited for the trend break to get into this trade. Most of us did. Some of them bought all the way up here. And then we were looking for logical reasons to take profit. Now, when you're counter trend trading, you certainly want to not be overly aggressive on your profit taking, meaning usually you want to get out at your first support level down, because if that support holds during an uptrending day, as you would expect it to, you don't want to get caught up in the reversal, okay? Pullbacks are one thing, reversals are a completely different thing. We were not looking for reversals. We were looking for pullbacks worth trading. We found them. It was 2 and done for me. I was done by 9:51 this morning. Several people were done after this first trade, but a lot of people were still wanting to trade, and that's great. Okay, that's great. The third trade that we talked about in advance, we were coming off of higher lows both on Qs and SPY. Remember, higher lows are bad for what? Puts. So puts are no longer on the table for us because we're putting in higher lows. Higher low, higher low. Now we're talking about this on the Qs. Guys, what is likely to happen at the break of this resistance? I'm going to draw a line of resistance right here to show you. You're putting in higher lows here, guys, right? Okay, we talk about this all day long, and you guys who watch my videos already know this. I call this the bottle cap scenario. Okay, we're wedging up. Statistically speaking, the odds of this breaking high are higher than the resistance holding and reversing back down. It's statistically true. Okay, so I had people in my community, Jimmy, would you buy puts here? Jimmy, I'm buying puts here. I said, guys, I wouldn't do puts here. Why? Because higher lows are bad for puts. I expect this thing to break to the upside, not the downside. Okay, Qs and SPY, higher lows. So I said to everybody, if Qs could get a candle close above that pre-market resistance, this resistance right here, I'm expecting the Qs to run up at least to their high of day resistance, maybe even to 498.12. Okay. We close above that here for the first time. We close above it at 10:02. That's where our entry is on SPY, 10:02. Now, what were we aiming for? Either the Qs to hit their resistance or SPY to hit its resistance. Well, that resistance exists right here. I don't care which one you take. Okay, I don't care if you take it at all or not. I'm trying to teach you price action so that you could stand a better chance. For those of you who think that trading is strictly 50-50 odds of winning, you're wrong. Yes, every trade has the potential to not work, but there are absolutely a number of ways that you can increase your odds of winning. That's what we're trying to do here, okay? In every trade we talked about, they weren't home runs unless you bought and held any one of these calls for the entire move up, but they're great winning trades. Scalping 10, 20, 30, 50% per trade in minutes is a beautiful thing, okay? It's not every day we get these nice trending charts. It seems to be happening a lot last week while I was on vacation, but the market is very volatile these days. There's a lot going on. You've got an election year. You've got assassination attempts. You've got earnings. You've got just potential black swan events here, there, and everywhere. You've got crap all over the place. The market is like, feels like it's a deck of cards, right? And even though we shouldn't be trading under any fears or expectations, the truth of the matter is we get wild moves that seemingly come out of nowhere often. It happens all the time. It happened today, right? So I prefer to stay in the market for the shortest amount of time possible. That's just me, because I don't want to be subjected to these violent moves in the opposite direction for what seems like no reason, right? So I like to get in, I like to play with position size, and I like to get out quick. But the position size is irrelevant unless you're using this money to make a living, like I do. But if you're still learning, understanding price action, understanding support and resistance, how to use it is just how you build the 3 C's, right? We're looking for 3 C's. We're looking for consistency first and foremost, because when you are consistent, you become confident. When you are confident and consistent, you become comfortable. That is what is necessary to become a consistently profitable trader. You need to be consistent so that you can be confident, so that you can be comfortable. Because when all of those things are beneath your feet, you feel like you're on top of the world, solid ground. And when you take your trades with those 3 C's in place, you can then scale up and turn your trades into meaningful money. This is the key. You don't get to skip the 3 steps leading up to the scale up one that is going to pay your bills. You've got to have that foundation under your feet first, guys. Consistent, confident, comfortable. Okay? You have to. This is a necessary part of this business. This is how you earn the right to demand money from the stock market. It's not luck. Sometimes we have lucky trades. Okay? It's not FOMO. It doesn't work with those things. You need to know what you're doing, why you're doing it, so that you can feel comfortable doing it, and then trading starts to click. Okay? So, whether you're trading resistance of the Qs hitting, which was at this first one here, we got in here, you got out here, or you got out here because SPY hit their resistance. We pulled back to support. Well, when should we be buying calls during an uptrend? On pullbacks to support. If you happen to get lucky enough where support is being held on both Qs and SPY at the same time, there is no better time to take a chance than that. Okay? Now, this seems like a pretty random spot to get into calls, but it's not, and I assure you, we talked about this trade all the way back here. If you didn't buy your calls off support, looking for this area to be your take profit zone, I wouldn't touch calls until Qs close above 498.12. Well, guess what time that happens? 498.12 happens at 10:28. I told everybody if we can close above that, I'd be looking for 498.89. That's a 70-cent move to the upside. 70-cent move to the upside. Here you are. Okay? Now, when does the Qs make it to that target line? 1031. So you got in at 1028, out at 1031. As clean of a move as you could possibly ask for. In at 1028, out at 1031 if you're playing line to line in the Qs. If you're holding your trades to hit resistance on SPY, just make sure the Qs, when they get to their line, if there is a pullback, that there is a meaningful support level or spot on the chart that you're willing to say, hey, as long as it stays above here, I'll give this thing a chance to keep moving. You could say, as long as we're putting in higher lows on the Qs, I'm gonna stay in the trade. Whatever you got to do to be comfortable staying in the trade. I suggest once we get to these profit targets, if you want to stay in these trades, simply tighten up your stop loss so that you can take part of any continuation of a move to the upside. Okay? I like to use my lines of support and resistance as those stop areas. So if I got in here and we make it to here, and I feel like I want to hold longer because I believe SPY has a chance to make it up to this line, I'll make sure that as long as we stay above this 562.83 support, I'll let it ride. Because no matter what, if it pulls back to this line or gets below it, I stop out with no profit or little profit, whatever it is, maybe a small loss. But that's the risk you take by allowing greed to enter into your trade making decisions, right? You're already in a winning trade. If you try and hold through your original take profit planned point, make no mistake, it's greed forcing you to feel that way. Otherwise, your original plan was get in because the Qs closed above resistance, get out because they made it to their next resistance. Easy peasy lemon squeezy. If you choose to deviate from that point, greed's telling you, hey, I like the uptrend. I want to make more money. There's nothing wrong with that. Just protect yourself from yourself is all I'm asking. Put a stop loss in place so that even if it's at break even, so that you can have comfort in knowing that, hey, it might not make it past that line, but that's okay because I can't lose money on this. There is nothing more comfortable than being a trade you can no longer lose on. You might give up profits that you once had, but if you don't go backwards, that's a beautiful thing. Okay? So this exit here was suggested because Qs hit that resistance. This exit here was suggested because SPY hit a resistance. Now, at that time, of course, we're interested in buying calls if we're out of a trade. Where is the best opportunity to do that? Well, what do we have here? What are we making here? Higher lows. Yeah, but Jimmy, we're pushing up against resistance. Guys, let me bring you back to the bottle cap scenario. Higher lows, pushing up against resistance, you're putting a bunch of pressure on the sellers. What you're hoping for is that that pressure gets to be too much and we blow the lid off the top of that level. Statistically speaking, that is normally how it works. Okay, so because of the higher lows, I would not be interested in puts. The only chance that I would take puts is if we were able to close below this trend line first, and then I would need to know if there's enough room between that point and the next support, because during an uptrend, you want to get out at the first support level you come to should you take the counter trend trade. It's just one of my rules. Trust me when I tell you, it will save you plenty of times, okay? Now, if you are looking for calls and you miss your pullback entry here because of a higher low, you might want to wait for a candle close above resistance. Wait for confirmation of the wedge break to the upside. Many of our community traders, they don't wait because this works out a lot. So they get in early looking for the little extra oomph to the upside. Well, we get exactly that. Qs pull back to support, 1019. SPY, what am I looking at here? We're all the way up here at 1040. So Q's already hit that here, 1040. Q's putting in higher lows. Okay, they're in the same situation. Q's are wedging up. And again, we're expecting that to move to the upside. It does that. Guys, this pattern repeats itself all the time. Not every time, but often enough to make yourself aware of it. But the key here, the key is if you are interested in playing puts, please wait for the higher lows to stop printing. Okay? Trying to time a reversal is very, very difficult to do so accurately. And I would have to argue that if you catch a reversal, a true reversal at the perfect time, a lot of that is luck. But if you're simply playing puts because we're hitting all-time highs, I had to remind people, guys, every one of these candles is creating a new all-time high. And I understand that naturally people think that because it's an all-time high, it can't go higher. It's got to take a breath. It's got to come down. And while I agree with that, because no trend lasts forever, you must wait for the right time to counter trend trade that. Okay? These trend lines are a beautiful thing. Beautiful thing. Look at these moves. We closed above resistance during an uptrend. Where is the next move likely to take us? the next line of resistance. Clean, clear, comfortable. Where's your stop loss on this? A candle closed below the reason you got in. It doesn't have to be a huge stop loss. We got in because we were trending up. We closed above resistance. We're expecting it to go to the next resistance. Doesn't mean it's going to get there. Okay. But take a look at ADD. Take a look at your things. There's tools that tell you whether momentum is on your side or not. Qs and ADD are the tools that I use to find those things. Okay. Qs comfortably moving up. SPY comfortably moving up. ADD trending up. Which resistance is going to be the last one? That we don't know. That we don't know. But what I do know is that I ain't touching puts unless we take out that trend line. Period. Gym indicator at resistance. It's usually a pretty good setup, or gym indicator on support. Pretty good setup. Okay. Resistance pulls back, but you're in an uptrend. So where are you going to take it to? Your next support. Well, that's right here. It's not worth the play. Okay. But if you're trending up and we're pulling back to support and all things are telling you it's good to the upside, consider it. We're moving up. We're pulling back to resistance. Green arrow, momentum's on your side. Let's go. Now, we recognize, like earlier, guys, if you're in calls, we're at a resistance, both here on Qs. I think at 1124 on the Qs. Yeah, Qs, we're struggling to move higher at the time. Not jumping into puts here, but at that moment, Qs, ADD, NVIDIA, everything printed red. Take yourself out of the calls. Take yourself out of the calls. Doesn't mean buy puts. Just means consider taking your profits. You squeezed every drop of juice out of that particular lemon. Every one. If you got in at any one of these call points and played it to that point there, you literally caught the entire move. The entire thing. Okay? You timed it perfectly. All right? So, that there was an amazing trade. Amazing trend to the upside. I wouldn't touch puts unless we could take out this trend line and maybe Qs break some support levels. I'm not convinced that this is reversing. Now, hindsight, it did reverse, but we don't know that yet. The market's still very strong at this point, so wait for the trend line breach. Wait for the breach of the trend line. See what the Qs are doing. What's happening on the Qs at 1126? Oh, they had just closed below. We were talking about this. If the Qs can get below $500.40, we'd be looking for it to move at least down to this $499.80. Okay? That's a pretty good move, right? That's a pretty good move, going from $540 to $499.80. 60-cent move. Take that. If we close below that, we'd be looking for it to run down to the next support down. So every higher low that we made on the way up is going to be your targets on the way down. Okay? Which ones hold? Which ones fold? I don't know. So just be prepared to take profits each time we hit them. If you're interested in buying puts and you missed the opportunity because we breached here, when should you buy them? On pullbacks to resistance. Okay, were we hitting resistance at 1132 on the Qs? We sure were. So we're putting in downtrend, pulling back to resistance during a downtrend. This is your buy moment for puts. But Jimmy, where were we going to go if we buy puts here? Where's your next support down? That would have been your original target. Okay, so you have to say to yourself, is a move from $499.80 to $499.37, should that support hold again, worth your time and your effort? That only you can answer. For me, if it's over 20 cents, it's worth my time and my effort. Well, as luck would have it, we closed below that support, which means we're likely to head down to the next support, which is right here, which we also closed below. So what does that mean? That means hold that trade for the next support down, which we know exists at $498.89. So if you bought the pullback here at 1132 on SPY, that's here, and you sold when you got to The next target down that we hit is 1134. Ironically, SPY stopped moving down there as well. So again, you got in here because Qs were at resistance. You got out here because Qs hit support. This pattern happens often. So we pull back. We get all the way up here at 1140. Qs once again, right at resistance. The same resistance that held before. We enter puts again. We're looking for the move down to the pink line on SPY, down to the support line on Qs. This time it closed below that line. So where do we want it to go? To the next support down. Okay, we get down there. Well, what if it closes below that 498.12 line, Jimmy? Well, your next support is right here. You see it? Okay. 497.96, 95. Huh. Look at that. Lower highs are bad for what? Calls. Should we be buying calls off of lower highs because we're hitting support? Absolutely not. When should you consider calls? At least wait for higher lows. At least wait for a higher low to at least let you know that buyers are getting stronger. Okay, they're at least attempting to stop this move from the downside. But until that happens, you should be finding reasons to take puts. Now, what happens when we put in a higher low and we're still at resistance? Well, you wait. Nothing happens. I don't enter puts again until we take out this higher low, which happens here. Okay, great. Where do we go from there? If you entered your trade here at 1205, you got to know that you have support right there at 497.62. If we close below that, which we got right here at 1210, we'd be looking for the next line down, which was at the time 497.10. Oh, but Jimmy, what if we close below that one? Which we do here. We look for the next line down. You guys, support and resistance is a beautiful thing. I don't catch home run trades because I don't hold on to them long enough to catch them. But I don't need to. And neither do you. What you don't yet realize is that many of you are aiming too often for those home runs. And because you're constantly aiming for those, you're holding on to what was once a winning trade and allowing it to turn into a losing trade, hoping for a home run trade. Bring your expectations down a little bit. Get the consistency. Earn that 8, 10, 20% per trade. Stop with the 100% winners. This is not Wall Street bets. Yes, you will have some days that you say, screw it, and you hold all day and you get 100%, 200%, 300% winner. Could that have happened on today's chart? Absolutely. If you got into calls all the way down here and held them all the way up here, 100%, you would have made a massive gain. Hundreds of percentage point gains. Likewise to the downside. If you happen to buy puts up here and rode it all the way down, you made a killing. Absolutely. For those people, and there were 2 that I know of in my community today, who bought puts here during this wedge time, held all day and got lucky to get out with profit. Now, I don't condone holding and hoping, but we've all done it. Okay? Trading is emotional. It really is. Now, this was a pullback to resistance, playing it based on the Qs. The Qs never came back up. They never broke through this resistance. So the reason that there is no stop here on this trade was because of the Qs. Okay? Qs ultimately ended up making it down to where we wanted them to go and much, much farther. Okay, at this point, guys, I ended up going to lunch. SPY keeps doing SPY things. I got back from lunch right around here. Now, for those of you who question whether support and resistance is usable in any way, I just want you to remind you that every one of these lines in this chart is drawn an hour before the market opens. Okay, now we hit a bunch of targets high. Okay, now these were all-time highs. These are mathematically calculated levels. Okay, and look at how well they worked. Okay, we had no reference of previous trading history that was going to tell us this was going to hold as a line of support and resistance. Math tells us that, which is what I use to come up with these when we're at all-time highs. Likewise, here, look at this. Math. Okay? Down to support, up to resistance, down to support, up to resistance, resistance. And it goes all day. Once we get back below the pre-market area, our put line finally gets candle close below it. We come down to the next target. Now, again, we were in a downtrend here, so this is just a continuation of the overall move. We find support on our first target low, get through that, hit our future support. Right back up to resistance, in which case, guys, I know we're trending up, but last time we were up here, both on Qs and SPY, it rejected pretty good. Might be an opportunity if you're a counter trend trader. Not my thing, especially this late in the day, but enter. We talked about this trade in advance, taking it down to support right here. It was a quick, took a couple minutes, but ended up being a nice trade to the downside. Then we started to put in higher lows, higher lows, higher lows. Higher lows are bad for puts. Okay, so when should you consider taking your puts if you insist on taking puts during an uptrend? Well, at least wait for the breach or candle close below the trend line. At least give yourself that. And we got to adjust that a little bit because right here. Okay, that didn't happen till here. Now, this is way too late in the day to be trading, in my personal opinion, but damn, we came down. Now, the one trade I did say is that if the Qs can get below, let's get over to where we were talking about this. If the Qs can get below this level right here, okay, 495.92, I'd be looking for the Qs to head down to 494.87. Well, that happened at what time? Right here. Breached it at 344. Here's your entry on SPY. Straight down. Okay, now let's also pay mind to these support lines that we drew at 8:30 this morning. Look at where this move hit for the first time on the day, violently reacted, right back up to resistance. This time we close below that support, and where does it go? Straight down to the next support, where once again, violently reacts and heads straight back up to resistance. Tried to hold, buyers stepped in, pushed us right up to the next resistance. Tried to pull back, buyers closed us above here, held our futures line straight up to our put line. Is where we closed today, on our put line, which was a level of support at one point. So, as resistance. Guys, this stuff works. It works. I'm sorry for the length of this video. I've been having pent up 2 weeks worth of no videos. I'm pretty refreshed. I feel great. Today was an awesome day in the market. And I'm just happy to be back. So if you happen to make it through this entire video, thank you for that. I missed you guys. If you got any useful information in this video, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, well, we'd love to have you. There's a link down below. Please come join us. Spend a free week with us. See if you can get some useful information that helps you become a better trader. Whether you become a paying member or not is completely up to you. There's no pressure. Right? I don't change the way I teach, the way I talk, or the way I do things just because you're there as a free member and then it changes when you're a paid member. It's not. It's the same day. You're in the same room as all of my paying members. Okay? And that's pretty much it. So I appreciate you guys. I love you to death. I hope you did all right today. Till tomorrow, I love you guys. See ya!